Nvidia shares up over 2,000% in the last 5 years. When our next guest first got the stock in May 2020, it was just $70 a share. So this is a happy guest that we've got here joining us now to discuss Nvidia's explosive growth story. We've got Dan Morgan. He is Synovus Trust's Vice President and Senior Portfolio Manager. Dan, congrats on what is obviously great trade for you, getting in at $70 for this name. I'm curious, what do you think the runway looks like from here? Obviously, you've had a stellar growth story for Nvidia thus far. How high do you think this could go?
Well, you mentioned in the beginning of the hour here about all the concerns coming into this upcoming print, especially related to some reports that came out that potentially said, certain customers were not purchasing the Hopper series chips. They were going to hold off into the Blackwell, which is the new GPU that was introduced back in March, that was most likely going to come out in the fall. But you look at these numbers, it's not really indicative of that, right? We had data center segment, which was up 427%. They did 22.6 billion, which is an unbelievable number. And then the guidance that they gave for this upcoming second quarter was consensus was at about 26.5 billion. They guided at 28 billion plus or minus 2%. So that gives me an indication that there is no slowdown in terms of order growth going into this upcoming quarter or the past quarter in regards to, let's say, holding off on buying the Hopper series in favor of the Blackwell series that's going to be coming out in the fall. So I think that put to bed that concern, at least for now. And of course, the stock has responded on the 10-for-1 stock split and all the other good news, and we're moving at higher levels right now. So very good report across the board.
Dude, when it comes to Blackwell production, something that obviously was asked about in the earnings call, and just Jensen saying that Blackwell right now is in full production. Talk to us just about exactly what that means and how quickly you think Nvidia will be able to scale that production.
Well, that's a good question. And a lot of the indications that we have shown they've already built out the supply chain for Blackwell. So they're already preparing for companies like Amazon, Microsoft, you mentioned in the beginning, Meta, they're all building out these huge data center. They want to use those AI chips. So they're preparing for that. There's a lot of news flashing around. I've heard October that they could start bringing out the Blackwell chip. Other people have said December, definitely in that calendar year, fourth quarter. But there's going to be delays. I mean, right now, the Hopper 100, which is their key AI chip, has about a 10-week delay between ordering and actually delivering. So I'm sure there'll be a massive influx in the fourth quarter of customers who want to upgrade, especially to the Grace Blackwell 200, which is supposedly the fastest chip that they create. There will be people that are willing to pay for that. It goes for about $70,000 estimated cost. But I think right now they're preparing and getting that supply chain ready to go so that they can meet that demand in the fourth quarter. But there's going to be lag times. There's lag times even today with their current Hopper series.
Well, I mentioned this in the intro, Dan, the market share that Nvidia has around chips, about 80%. I know you got a lot of chips players in your portfolio here. Which one do you think has the highest likelihood of biting into that market share from Nvidia?
I wrote a research report about that. We looked at the competition in the space, and it's kind of interesting because you have really two sides. You have companies like Intel with Falcon Shores and Gotti. They have chips that are coming out next year. You have AMD with their MI300A, MI300X. They're just starting to ship that. But what's interesting, guys, is that you have the companies who actually buy the chips. Meta has their own MTIA chip. You have Graviton and Trinanium, which is being produced by Amazon. You've got Google, who has the Tensor Flow series chip. So you have the companies that actually buy NVIDIA chips creating their own organic chips that could potentially impact their demand for NVIDIA chips. And then you've got the companies like AMD, Intel, Marvel is in that group. Broadcom is slightly, but they don't produce directly chips. They make mostly accelerators. But if you look at that group, those would be the three to focus on: Marvel, AMD, Intel, and then whether we'll see a slowdown in demand from their customers producing their own homegrown chip, so to speak.
Dan, when it comes to that 10-for-1 stock split, a lot of it having to do with the psychological factor, but I'm curious just from your perspective, the significance of this. Clearly, it doesn't change the fundamentals, but we have typically seen a little bit of a price pop when we've seen this happen at other companies. So what exactly does this potentially mean about some of that activity that we could see in the short term?
Well, there's studies that have come out that shown that there is no benefit of buying a stock either before or after it splits in terms of appreciation. I know a lot of retail investors are probably salivating at buying Nvidia at $90 a share, but stocks that split more perform better than stocks that split less. Makes sense, right? And I hark back to Alphabet and Amazon that did the 20-for-1 stock splits a couple years ago and made their shares more obtainable for the users of their products, right? You know, the search engine and online buying and so forth. So I think it's a huge positive because it allows the average retail investor to maybe buy 100 shares. And it is a psychological thing. But as you mentioned, it doesn't change the valuations. You know, Nvidia still trades at 50 times book. It still trades at 80 times earnings on a trailing basis. But it does make it more palatable for people to accumulate 100 shares or 200 shares. So I think it's going to be a win-win for Nvidia. It should drive the stock higher because it's going to allow retail investors to participate more without having to buy, let's say, fractional shares.
Dan, sorry, you might have not heard me there. What would make you sell Nvidia?
You have to bear in mind that as you introduced me, you introduced the time that we placed it on our buy list. I was the one who was the catalyst behind that. I also own it personally. So, it would be really difficult to part ways, at least where things are today. Things would really have to deteriorate for them. And, they can always lean back on their GPU experience in the gaming space and in the data center space, even away from AI. There are just so many facets of the growth story. I know on the call, they talked about how they're broadening their customer bases beyond just, the big tech companies are getting into automotive. You talked about that earlier in other applications. So I think this story is really just in the beginning. It would really be difficult to make a strong case right now to think about selling the stock. But if you guys have some ideas, let me know. I'll definitely listen.
Well, Dan, I want to end on this because obviously there's the Nvidia, AMD, Intel, but then you got the cloud providers with the silicon chips in the space of Google, right, Amazon, and Microsoft, and obviously Google is winning, AWS coming in second there. Which of those three do you think is going to be the winner of that cloud community?
Well, to me, it would have to be Alphabet. They really have a lead on in terms of between Meta, Microsoft, and Amazon. Their TensorFlow unit has been producing chips for a very long period of time. They just came out with their version 6, and they talk about how they're making huge strides in terms of those chips. So I think if you were to try to bet on who's going to have the best organic or homegrown chip, to me, Alphabet seems to be in the driver's seat. Microsoft just came out with a chip recently, Meta within the last year. Amazon just released, as I mentioned before, the Graviton and the Trinanium, which are their two new chips. Those are all more recent. And let's admit, guys, this is an area they're not really a super expert on, right? Their areas of expertise are in other areas. So, but as I mentioned, Tensor's been, the TensorFlow unit has been producing chips with Broadcom and in a dual effort for a very long period of time. So they would have the leg as far as the data center and social media companies.
All right, Dan Morgan, Synovus Trust Vice President and Senior Portfolio Manager. Thanks so much for joining us here this morning.
Thank you.